traders. Raghee here. Welcome to our Thursday, November 19 pre-market show. Welcome. If this is your first time, we're going to spend about the next 20 minutes going over what I see in the market in terms of some longer term structure, which I think is turning actually very bullish. And then also take a look at some of the intraday psychology that is going to affect the kind of day trades that I look at. Now, when I talk about the kind of day trades that I look at, let me give you guys a little bit of an example of what we're looking for, a little bit of a walkthrough. So what does a typical morning look like? It looks like starting off with an economic calendar, Forex Factory, tradingeconomics.com, Estimize. Now, I know a lot of people start talking about earnings when earnings season starts. That's too late. I've already got for my Sector Secrets Mastery folks, we're already, we're focused on the ETFs, we're focused on the stocks within them, but what we're doing is already thinking about what are we going to be dealing with 6 weeks from now, 4 weeks from now, what's coming up in January for earnings. You don't want to think about earnings season right on top of earnings season. You want a 4 to 6 weeks heads up. So that's already underway. And that's where I'll recommend using an earnings calendar like Estimize. If you want to use Sector SPDR, that's fine too. They're both free. So a lot of the early morning is looking at these websites. All right. After we've done that, I've got a pretty curated. So on another monitor here of the 9, I've got TweetDeck running on the Vivaldi browser. And it doesn't matter what browser, it just happens to be running on that. And so what happens is I've got 5 different feeds on my TweetDeck. I've got a curated feed of different types of Twitter followers. I love Twitter. I think financial Twitter is great. It gives you a pulse of what's going on without dealing with this highly curated, it's selective, kind of financial media conversation. I think that I'd rather look at other traders and what they've got their eye on, not a bunch of people who put on a suit and tie and talk about the markets for a living. So while I have CNBC on in the background, I really could care less. I want to know in case there's some sort of major event, because that's where they are exceedingly helpful. Maybe they've got a hedge fund manager that they're interviewing that will move the market. Maybe there's a particular event where the Treasury Secretary or a Federal Reserve member or POTUS is speaking. Those are things that CNBC is excellent to have up, but muted on your screen. All right, so what do we do after that? We make our way over to the chart. So let's do that right now. So now what's the plan? I want to determine at this point in the morning what the likelihood of gap psychology is. And right now, I don't see a lot by way of potential gap psychology. Gap psychology is not going to be what rules my day. It's not even going to be what rules my morning, quite frankly. What it's going to be is a look at the initial 5 to 10 minute reaction, maybe affecting the clearing or opening range. A gap down is going to have a little bit more of a bullish impact on the market within the first 5 to 25, 30 minutes. A gap up is going to have a little bit more of a bearish. So those are things I want to be aware of. I also want to be aware of my current directional bias. So let's talk about that. Where do I want to have my anchored volume weighted average price, my 10-day rolling? Well, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, anchored to the 9th. So I'll go ahead and move that. All right, and what I want to know is whether we are above or below both the first of the month anchored VWAP and the rolling 10-day. Now, a lot of you will notice we're inside that VWAP vice grip. However, it's not as troublesome when we have a double green market. So for example, look at the upper left-hand corner of the S&P chart. This is the daily chart. And what you'll notice, it's a double green. 8, 13, 21 have bullish structure, which is to say the 8's over the 13, the 13's over the 21, the 21's over the 34, and those exponential moving averages are saying, yeah, overall, we expect the markets to continue to climb. So I'm not as concerned that we're in between the two VWAPs, but it is something at least to pay attention to. All right, so the ES is not as big a deal because it's double green, but let's contrast that with the NQ, the NASDAQ futures. This is a little bit more problematic. This is going to be a market that's open to two-way trading. Frankly, this is a market that I'd probably at this point rather avoid. Dow is double green, Russell is double green, S&P is double green. I've got that really good organization on those three indices, and NAS is lagging, probably still from some of the lingering negative impact of that work from home unwind that we saw, because work from home benefited tech the most. And now we're seeing with the vaccine narrative and even a little bit of sector rotation, which goes into financials and energies, benefiting the Dow and the S&P the most. Work from home unwind is negative to tech. The vaccine narrative is positive for airlines, transportation, healthcare, financials, energy. That's the sector rotation part of that conversation. So S&P and Dow are going to benefit from that. NASDAQ's not going to benefit from that at all. So with that being said, yesterday we bought the NAS, so yesterday we were still above those key levels, even though it was a yellow wave, and we bought a nice V-score low. And that's something else I'll look for. So for example, yesterday, what was our setup on that? Let me mention this, gang. We're going into a holiday week, and this is really not a matter of right or wrong. I don't want this to make it sound like there's only one way to trade the market. That's not the case at all. The only way to trade the market is the way that resonates with you. The way that resonates with me is very much a sort of sniper's approach, right? In other words, you spend a lot of time putting yourself in position. My husband and I watch History Channel and Discovery Channel and all those things. He loves that stuff. And they every now and then, actually, I was watching a video on, for those of you that are Jocko Willink fans, Origin, Maine. Those of you guys are Jocko Willink fans. You guys might know that, the Indian clubs. I'll keep these up by my desk. It's a good thing to work the shoulders and stuff. But anyways, I was picking these things up, and they had a video about a sniper. And I'm like, gosh, that's that mindset. Put yourself in the right position, wait for the right time, and one shot, one kill. One shot, one entry, one really good trade. So yesterday, that's exactly what we did. I don't find it effective to be in and out, two-way trading repeatedly throughout the day. Some people love that. If you love it because it's effective for you, terrific. I will tell you, and this takes your own soul searching. I'm not telling you this is where you are, but having done this for 3 decades and watched, observed, trained thousands of traders, 90% of two-way traders just like the action. Go to the track, go to the slots, whatever. Don't do it in the market. Most traders who like two-way trading and active in and out just like to be in and out. There's a dopamine hit. I get it, but they're junkies. And it's a tough thing to accept about yourself. If there's anything that I tend to be, it's a little bit more conservative. So that sniper, take a lot of time to get into position is more my speed. Neither extreme is good, right? You want to be somewhere in the middle. But yesterday, especially on the NQ, we found our low and we took advantage of it. That was something we did pretty early. And another thing that we did was use some options. A lot of things that I like to do in the markets. I'm trying to rewind back to that part of the day. There we go. This was our trade in here, right in there. V-score low. Thank you very much. Buy some QQQ calls. Get long the NQ mini. Get long the NQ micro. However it is, choose your own adventure in terms of that long position in the NASDAQ. And that's pretty much what we did. So, don't be afraid to not be active. This push to always have to do something comes from a very flawed employee mindset. I always know when a trader's coming from a job into trading because they feel like the clock is 9:30, the bell is rung, and they've got to get to work. We're not rewarded for that. We're not rewarded for that as traders. We don't work in a time economy. We work in a results economy. So I hope that resonates with some of you. I mean, if you like two-way trading, it's like, Rod, I get it, but I like that. You know, I got the pulse of the market. Awesome, go with it. But I find that's very rare. I find that you'll put on a lot of trades, you'll rack up a lot of commissions, and you'll have a very low win rate. And I know low win rates, when we want to go into the logistics of longer term success in trading, they'll say, well, you don't need a high win rate. That's fine. But I will say, when you lose often, you'll find yourself doubting yourself. Losing often is not something that most people do really well with. So there's a really cool series on Netflix right now. I really recommend it. And it's called The Playbook, A Coach's Rules for Life. And I just watched, I've been eye guzzling it. Patrick, I won't even pretend to pronounce his last name. It's French. Mouratoglou. Patrick Mouratoglou. He's Serena Williams' tennis coach. A lot of people's tennis coaches. And he had a really good point. I may be dealing with a talented tennis player, one who's capable of winning, but if they have a lot of bad matches, they lose their confidence. So anyway, protect your confidence. So let's see what we've got, excuse me, in terms of gap psychology. Again, what do I want to see? I want to see the market open. If it's going to be a gap down, it should open below yesterday's close and yesterday's low. So you'll see the NASDAQ is minorly there. The S&P, it's very close, right? But we've snapped back up above yesterday's low. So I wouldn't call this really clear gap psychology at all. The fade is not going to be the dominant play. I mean, it's probably pretty close in the Russell. So just be a little cautious on the open. And I would even furthermore say, in this environment, going into the holiday weekend, well, this isn't the holiday weekend, but we're starting to get that sort of holiday action. We had initial claims already. We had Philly Fed manufacturing already. We've had a Fed Reserve member, Meester, already. And we have existing home sales at 10 a.m. We've got Meester again at 12:35 p.m., all Eastern. So let's wait and be patient for some V-score lows. I want to be long, prioritize the Dow, S&P, the Russell, prioritize the sectors, prioritize the stocks within those three indices. Lastly, I'll look at the NAS, and really what would be better for those of you that want to play the NAS is get a little bit more granular. Index, sector, stock. I don't love the index. What do some of the individual sectors look like? What are the heavily weighted sectors within the NASDAQ? XLY, XLK, and XLC. Okay. Maybe there's a relative outperformer amongst those three. Maybe there's a relative outperforming stock within one of those three sectors or within the index itself. So when you've got a market that you don't have clear directional bias on, and the NASDAQ is that one, think about going a little bit, you've got the tip of the iceberg, which is the NASDAQ, go underneath, right? What's inside that, find the opportunity there. So I'm not going to be as keen on playing the NAS today, maybe one of those individual sectors, certainly one of those individual stocks. And you might ask, well, what do individual stocks have to do with futures trading? Remember, I don't categorize myself, limit myself, pigeonhole myself into being a futures trader. If you're trading futures indices, you are a stock trader. Accept it, use it. I'm a stock trader. What does that mean? I've got this S&P index. S&P could be SPY, SPX, ES futures. Inside that, if you were to crack that thing open like an egg, you'd see stocks, you'd see sectors, you'd see these groupings. It happens to be wrapped up in a nice little leveraged package called the S&P futures, but make no mistake, you're trading stocks. Treat the market that way, and you'll only get better at it. So a couple other things, positions that I have open, these have been open since before the election, is do I still like gold? I know I'm going to get a lot of questions about gold. Yes, I still like gold to the long side. Do I like bonds to the long side? Yes. The bond play is absolutely a long only play. When gold dips between 1880 and 1850, I just start going out and looking at Jan 15 expiration GLD calls at the money. The later I get into November, the more I'm going to start thinking about February. The more I'm going to start thinking about whether or not it makes sense to go further out into the option chain and give myself time. So I get asked a lot about time decay. Time decay is not an issue as long as you're not buying options that are right on top of expiring, because then you need more momentum to overcome the time decay. Options are depreciating assets. The minute you buy them, it's like buying a car and rolling it off the lot. Boom, instant 15% depreciation. So while options are not that bad, remember, you own a depreciating asset. One of the best ways to belay that depreciation is to give yourself time. All right, the other market that I'm still very bearish in, so I'm bullish bonds, bullish gold. I'm bearish the dollar, the US dollar, which is to say we can continue to look long the euro, long the pound. That could be FXE, FXB, 6E, 6B, the Forex pairs. But when I see a little bit of dollar strength, and I do expect dollar strength because of the gold weakness, not that the correlation is this immovable fixed thing. What is the correlation right now between those? Let's see. What is it? I think, let's see. It's an inverse correlation or negative correlation. And it's actually rather low. I wouldn't hang my hat on it. I wouldn't bet against it. It's going to help you from time to time. But generally speaking, if you see a weak gold market, go look to see if there's an opportunity to short dollars. And that's what I will focus on. Is there an opportunity to short dollars, buy pound, short dollars, buy New Zealand dollar? That's by far my favorite. Short dollars, buy euro. All right, let's tackle some questions. See what we've got. Remember, we're rolling into this holiday affected time in November, then we're going to roll into the holiday affected December. Things get a little tricky now, and it's pretty logical to shorten the time frames unless you see a dramatic sell-off and one of your wish list price levels hit, and then you can start to build those longer term time frame positions on preferably trend pullbacks. All right, let's see. I would like to ask you, is the retail sector looking strong enough? Yeah, XRT is your more liquid ETF for that. Yeah, it's looking very strong, but I'd still want to buy a pullback. And so I want something that looks a lot like what we saw on the 12th. That's not that long ago, right? That was 7 days ago. I don't like the retail sector more because it's up here. I like the retail sector because it's showing strength, and then I'll buy the pullback when it does. So I'm fine with that. The only problem is retail is not a high concentration weighted ETF. So when you break down the stocks within them, they don't have that big differential in percentage weighting to say, well, these are the heaviest weighted and these are the ones that are going to be most influential. So I like XRT, though. I'd have to play the overall tide, okay, on that one. So cool question. Thank you. Let's see. Good morning, Bradley. Day 4 of live trading. Green streak. Okay, cool. Let's make it 4 for 4. Yeah, let's wait for the pitch. Exactly. You got it, my friend. Is today going to be a blue light special day? If we get a sell-off, I need some things on sale, but I like where your head's at there, M. Bartlett. Good morning, gang. Buenos dias. There, Rafael. We look at gold? Yeah, I'm bullish. So if it's down in the range between 1880 and 1850 on the front month, that's the December GC contract. I'll start eyeballing some Jan 15, or what is it, Feb 18? I'll start looking at some GLD calls again. All right. Natural gas. Yes, I like natural gas very much. Heads up. We do have Natty Gas Inventories today at 10:30 Eastern. We have a zone. We have a zone that we're looking at, and natural gas sold off a little bit more within the zone. And, that's okay. I'm not happy about the lows that we just hit. It's a very volatile market. There's a reason. So yesterday, when I talked about natural gas and copper in the free video, I mentioned I don't like trading natural gas futures. And that is why. They don't call this thing the Widowmaker for nothing. So I've got UNG calls, and I have them, and I'm taking heat on them. I'm going to take a lot more heat on them today, but they were insanely inexpensive, right? What do you pay for a UNG 10 call? About $1.10, right? So you don't have a very risky trade going on. You don't have a lot of risk or a lot of margin tied up, and I'm not going to play the underlying futures contract because of movement that looks like that. I want some staying power, and the options are going to provide that. So yeah, I'm not happy about where Natty Gas has gone. I'll take a look to see if maybe we're seeing a decrease in the heating degree days from the EIA, or whether or not it's more news about supply. We have this inventory coming out, or whether it's a more mild winter narrative, whatever it is. But, look, give some of these trades time, especially when they're in distribution, poking at oversold support zones, okay? Which is, by the way, what gold is doing as well. So next up is, Samurai Eddie, I love it. It's like playing chess over gambling. Hey, Samurai Eddie, have you checked out Magnus on Netflix? It's queued up on my watch list. You mentioned chess, and I thought about that docu on Netflix. Okay, how the hell do I manage this stuff? Jamie, this is what I do. It's like asking a football coach, how do you manage recruiting and injuries and the game and the interviews and all that kind of stuff. It's what I do. Yeah. Thank you for asking. And look, it's really easy, Jamie. All I'm doing is commentating about my own trading. So the trading isn't separate. Everything starts with the trading, and I just get to talk about it. So it's pretty awesome, actually. But thank you for asking. All right, gang. And just like that, we are out of time. So every morning between 9 and 9:20, we get together here at the Simpler Futures YouTube, Facebook, my YouTube channel. I'm going to add my Facebook to it next week. Talk about the markets for a little bit. Take your questions. Boy, that $20 goes by really 20 minutes goes by really quick. I'm going to head on over to the futures room. I'll see some of you there. I'll be later on today. I'll be in the Sector Secrets Master Room, seeing what we have in terms of some of the pullbacks that we saw yesterday in healthcare and in utilities, where those might stall, because I like the longs in some of those. And let's see what kind of day trading sessions we get. Kim, SMH, yes, do keep an eye on that one. That has been the gift that keeps on giving. It's actually one of the better related markets to the NAS. Yes, great point. Scott, I don't play GDX and GDXJ or even Nugget very often. I don't think that the gold conversation becomes also an alternative gold miners conversation. Gold miners are fine on their own. I frankly don't trade them that much. I'll play GLD. I'll play the commodity itself, but I don't play miners that often. Okay. But GDX, GDXJ, Nugget, they're all great, but they've got their own narrative. I don't think they're tethered to gold as strongly as one would think when you lay the two charts up side by side. So do I hate them? They're not my favorite. They're not my favorite. All right, gang, gotta go. I will see you all tomorrow, okay? Be good to each other. Thanks as always for the time. Put the questions below, and I'll see you at 9 o'clock. All right, gang. I'll talk with you soon.